This is going to be an extremely important video for every single Palantir investor out there. If you are a Palantir shareholder, I want you to listen very, very careful and get ready. I don't want you to click nothing. I don't want you to buy nothing. I don't want you to sell nothing. I just want you to listen very, very carefully, because the next 10 minutes is going to save you from making some horrible mistakes this upcoming Monday, August 4th. And after hours, we're going to get the Palantir quarterlies. A lot of new investors are going to make a lot of mistakes. A lot of existing investors who have been a part of this journey for the past couple of years will make a lot of mistakes. It's important to have a plan ahead of an event like what we have coming up on Monday, because let me tell you something, it's not every day when you have a stock coming into a landing this hot. This is like basically landing an A380, fully packed, fully backed, lots of fuel, lots of luggage, full flight. You've got no landing gear, and you've got no visibility, wind shear. It's absolutely a very, 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 very hard landing. To basically stick this landing, Palantir team is going to have to be on their A game. And the reason is very, very simple. Not every day you have a stock coming into quarterly earnings with 540% of profit on the share price over the past 12 months. Even year to date, Palantir is up 105%. When you're coming into earnings with so much expectations, with such a high performing share price, with so much FOMO and hype, you have to be perfect to stick that landing. And it's a very, very hard ask from the Palantir team. Now, this isn't the first time where this scenario exactly is playing out. When we were talking about the May 5th earnings, the same scenario was right there and then. And May 5th this year, Palantir came into quarterly earnings with perfect pricing, with hype, with FOMO and all of this. And with the share price going from 75 in the beginning of 2025 to $123 at the moment the earnings came out. And what happened? Well, the share price dropped to $108 almost immediately. Panic set in. People started thinking this is the end, selling out before it gets to worse, blah, 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 blah. All this headless chicken running around, basically reacting to price action in the short term instead of fundamentals and long-term mindset. Everybody who sold off during the panic sale of 123 to 108 in May 5th, May 6th, everybody who made that move have missed out on the historic run by Palantir from $108 to $154 today. A 50% run in just a couple of months. And it seemed like the end of the world. Because, as I always say, in the short term, the stock market is unpredictable. It can do a lot of crazy stuff. It is absolutely irrational. And it can stay irrational for long periods of time. Now, the estimates right now that we're looking at with Palantir is about $940 million, give or take, on the revenue side, about 38.5% of revenue growth, and we're looking at 0.14 EPS versus 0.9 just the previous quarter. That's almost a 50% increase in EPS, earnings per share, adjusted EPS, that is. Now, that is a very, very, very hard demand from Palantir. And when you add on top of it the Q1 guidance, which was $3.9 billion of annual revenue and an annual growth rate of revenues of 36%, this is a very tall order for any company, Palantir included. Doesn't mean they can't get it. Doesn't mean that it's impossible. It means that this is not a layup. In basketball terms, this is probably a three-pointer, contested three-pointer at the end of the game that they got to hit here. It's not easy. Now, there's a lot of risks, a lot of negativity that can happen with Palantir because of various reasons that have nothing to do with the fundamentals of the company. You have valuation stretched in the short term. I would even agree that it is overstretched. I think Palantir current valuation, whatever, 600 PE, 340 PE, in the short term, it kind of ran ahead of itself. I think the pricing of the stock is not really rational. It's more about hype. It's more about FOMO on the short term. I still believe, and in fact, I wholeheartedly believe that this is inning one or two for Palantir. And I think we're going to see multi-trillion dollar valuations for this company. But in the short term, it's certainly running a little bit ahead of itself. And when you have valuation stretching out like this, well, at the first sign of trouble, poof, okay? Then, of course, you have all these expectations that people are putting on the Palantir shoulders. They've got to wow investors every single quarter. And, the same thing with NVIDIA. When NVIDIA came out with 60% revenue growth, people are like, oh, man. Well, Palantir is at that place today where people are expecting the impossible. It's going to be very, very hard to satisfy these lofty expectations. On top of it, people forget that the government side of Palantir is about 50% of the business, and the government spending is lumpy. It doesn't happen in a linear manner like we have with commercial. Governments don't spend linearly. You have lumps. Sometimes it's a lot, and sometimes it shrinks. It's not something that you can gauge on a quarter-to-quarter basis. And if the government lumpiness right now is not on the good side of Palantir, people are going to interpret that as weakening government business, and it's going to price in the share price. So there's a lot of risks for the share price in the short term, but luckily for long-term investors like myself, none of this matters because none of this has to do with the fundamentals of Palantir. It's all about sentiment and the voting stuff, not the weighing stuff. You remember that Benjamin Graham, the stock market is a voting machine in the short term and the weighing machine in the long term? Well, that's exactly what it is. So if you ask me, and this is just for popcorn value, for shits and giggles, what are the three scenarios here that can happen? Well, there's really quite clear paths here for Palantir on Monday, right? If Palantir does what I think is a very, very hard act and sticks this landing, which means that they beat top, they beat bottom, and they give a guidance that's basically better than what anybody expected, in that case, the share price is going to continue to fly up, right? On the other hand, in the other two scenarios, Palantir share price is probably going to take a hit. Obviously, there's the absolute worst case scenario where Palantir misses on earnings and maybe misses on guidance, expectations, and then all hell will break loose, right? There's the hybrid scenario in the middle where Palantir beats top line, beats bottom line, but the guidance doesn't wow the street. In that case, you could expect a significant correction as well because of the lofty valuations, because of the expectations, because of all this hype, right? So in two out of three scenarios, there's a drop. In one scenario, there's a pop. And there is no way to know what's going to happen on Monday. Nobody will know what's going to happen ahead of time. And if people are telling you they got the sauce, they know exactly what's going to happen, it's just gambling. Okay? Now, what I'm going to do here is I'm going to prep for whatever happens. I'll have a plan for whatever scenario plays out. Number one, what I'm going to be looking at for Palantir, and it's, of course, as you would expect, is strictly fundamentals, okay? I'm focusing on 1, 2, 3, 4 things I have listed on my card right here, okay? Number one, what I want to see clear milestones for the roadmap of government side of Palantir, right? The government side has always been a little bit unclear, a little bit secretive, very, very lumpy, like I said earlier. Let's see some guideline about the milestones and the roadmap for the government spending for the next year, for the next couple of years. Let's see a little bit of a taste of the AI warfare that's happening between governments and Palantir is supposed to benefit from. Number two, as far as U.S. commercial growth, I want to see at least a 70% commercial growth on the U.S. side, just like we did last quarter. And if it's more, that's great. But if they can maintain that 70% growth, I'd be a happy camper. Number three, I want to have more clarity about the AIP growth milestones for the next year and for the next 5 years. Again, a roadmap, just like with government, what's going to happen with AIP, how are we monetizing, how are we onboarding, the whole milestone of what happens for the next year, for the next 5 years potentially. And of course, I want to see deal activity increase and accelerate. Last quarter, we got 139 deals of 1 million and above. I'd like to see that number accelerate. And the customer count is again a number that I particularly am very, very passionate about because I think customer count growth is taking away one of the biggest risks of Palantir, which is customer concentration. When you have about 20 clients holding, 50% of the business, it's a big problem. It's a big risk. So when the customer count expand, that's a good thing for the business. And I'd like to see Palantir expand that even further. Last quarter, customer count grew by almost 40%. I'd like to see a similar number this quarter. More, better. Now, my strategy for Monday is very, very simple. And I'm going to share it with you right here for free. There is no upsell. You don't get to pay me or nothing, none of this. Okay. So number one, okay, if we hit a hype cycle and basically the stock flies off the handle, right? Well, I basically will do nothing except dollar cost average slowly and carefully. A lot of students in my academy have a different rule where they basically trim a little bit when this happens. And instead of, sitting on this massive pile of unrealized profits, when a hype cycle like this hits and they have hundreds, if not thousands of percent of upside of unrealized gains, they'll take a little bit of a taste, a 10%, a 20%, but that's a completely personal decision. I'm going to DCA if the price flies up. Now, if the price basically goes down, then I'll have two choices. If the price goes down slightly, that doesn't change my dollar cost average. If the price collapses and there's blood on the street, basically for me, that means 20% drop off the 52-week high. In that case, I'll be ready there and then to start deploying double down DCA strategy. In my idea of how to invest in Palantir, and basically every other company that I ever invested in, is I dollar cost average across the year, no matter what happens. And if there's blood on the street, as long as the thesis did not change, if we have a huge drop of 20% below the 52-week high, I'm going to double down and I'm going to use that opportunity. Now, my thing here and why I'm explaining this is because I think it's very, very important and underrated in making this plan today on a Sunday, on early Monday, before the shit hits the fan. If you have a plan before you start this cycle of insanity that is earnings, live streams, and reports, and breaking news, and oh my God, everything is red, everything is green, before the chaos erupts, that is Palantir earnings Monday after hours, you need to have a plan. And your plan includes mental and emotional prep of what you're going to do if the stock price rises, what you're going to do if it drops, okay? And then having the capital ready on the sidelines so you can do that quietly and orderly. And most of all, work on yourself not to FOMO in. A lot of people, whether it's actually dropping or increasing, doesn't matter, make this mistake. Sometimes the share price flies up like crazy and people just buy in because they're afraid to miss out. That's a mistake. Sometimes the price drops and we have a 10, 15% drop on the day, and people mortgage their house and they buy in because they've seen it happen many times before, and like, oh, this is my chance. You don't know how low a stock price can go. You don't know how high the stock price can go. The stock market can stay irrational a lot longer than you can stay solvent. So what you do is you don't assume you can time the market. You can double down slowly, or you can DCA slowly, and you can ignore the noise around you, good or bad. FOMO and panic are the same thing, okay? So have a plan, make sure you write everything down, make sure you actually listen to the earnings call and read the fundamentals, not the hype numbers, focus on what's important. And of course, I invite you to become a part of our 22,000 member community over the academy, patreon.com/Tom Nash, where we teach you how to become exactly that. An investor that doesn't get excited when things are FOMOing, doesn't panic when things are crashing. Basically, people who are very, 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 very balanced. Whatever happens, they got a system. They know how to pick good companies. They know how to how to hold for longer, and they know how to become better long-term investors. Because at the end of the day, the secret to investing is quite simple. You have to have a plan. You have to know how to value stocks. You have to have the mindset. You have to have the education We're not giving you stock picks in my academy. I don't recommend stocks. I teach you the system of how to improve yourself, how to become better so you can be a better investor. Not that you become some sort of a junkie where I throw you stock picks and you just buy whatever I say. We don't do it this way. If you actually want to do it for real, join the academy. We'd love to see you there. And I'll see you Monday after earnings. Peace.